A Roth IRA is a great tool for new investors. You pay taxes on your money upfront, so your investments grow tax-free. After age 59 and a half, you can withdraw your earnings completely tax-free. Charles Schwab make it easy to open and maintain both standard taxable brokerage accounts and Roth IRAs under one login. There are several vital rules and limitations to consider. Earned income requirements. You must actively work and possess earned income, such as W-2 wages or self-employment income, to contribute. Passive income streams, including stock dividends, rental property revenues, pensions, child support, or unemployment benefits, do not qualify. If you mistakenly deposit $7,500 without qualifying income, the IRS will impose a 6% excess contribution penalty, $450 per year, until the mistake gets formally corrected. Income-based eligibility, MAGI, affects how much you can put into a Roth IRA. For 2026, contribution limits began to phase out at $153,000 for single filers and $242,000 for married couples filing jointly. Limits are severely restricted for those who are married filing separately. Annual contribution caps. For the current tax year, annual contributions for individuals under age 50 are capped at $7,500. For individuals age 50 and older, the limit is capped at $8,600. No RMDs and strict inheritance timelines. Original account owners face no required minimum distributions, meaning you do not have to follow a mandatory withdrawal schedule during your lifetime. If you leave your Roth IRA to anyone other than your husband or wife, like children, grandkids, or friends, they must withdraw all the money and empty the account within 10 years of your death. Disabled parents can take small, slow withdrawals based on their own lifelong life expectancy. Minor children can take small withdrawals until they legally become adults. Once they hit the legal age of adulthood, their 10-year clock to empty the account begins. Spouse beneficiary privileges. A surviving spouse can roll the inherited Roth IRA directly into their own account, completely tax-free. They can treat the account as their own and are not forced to take mandatory distributions. Deadlines. The qualification timeline begins on January 1st of the tax year for which you made your first contribution. To make an official contribution for the tax year, you have until the standard tax filing deadline of April 15th of the following year. Earnings withdrawal rules. Even if you are over age 59 and a half, you must have held a Roth IRA open for at least 5 tax years before you can withdraw investment earnings completely tax and penalty-free. Earning withdrawal penalties and exceptions. If you withdraw account earnings before age 59 and a half, those earnings will be subjected to standard income tax plus a 10% IRS penalty. Your contributions can be withdrawn at any time, penalty-free. The 10% penalty on earnings is waived for specific qualified exceptions. First-time home purchase. Up to $10,000 lifetime maximum to buy or build a primary residence. Higher education expense. Paying for college tuition, books, or fees for yourself, a spouse, children, or grandchildren. Unreimbursed medical bills, covering medical expenses that exceed 7.5% of your adjusted gross income. Birth or adoption, up to $5,000 per children for qualified expenses following a birth or adoption. Total permanent disability, if you become completely disabled and are certified as unable to work.